With your spirit open and unconstricted, look at things from a high point of view. Miyamoto Musashi. And I believe what Musashi is telling us here is from the lesson yesterday about Wednesdays, when we step back, look at the weekly chart, and get a sense of what's going on in the marketplace from a high point of view. That is from the weekly charts. That is forgetting about all the minutia and just looking at the flow of energy and where it is going. Because that is what markets are all about. Money is energy. Price movement is energy. All the lines you see on our charts, price percent oscillator, signal line, derivative oscillator, Bollinger Bands, Heikin Ashi candlesticks, trend lines, all of these are energy lines. And it is so important for us to step back occasionally. That's what we do on Wednesdays at the close of the market. After you listen to the review, sit back with your favorite stocks and ETFs and just let your mind focus on the big picture. You will be amazed at what you start seeing. And the best way to make sure that you are able to capture that knowledge and that wisdom is to write it down. There's a saying in the medical profession, there's a saying in the law profession, if you don't write it down, it didn't happen. And what that means is documentation is key. What's so key about it? Think about the magic of writing. Once we were able to establish that in our culture, is it's record keeping. It's taking ideas and locking them in time. Whether it's on a screen, whether it's a video, an audio, whether it's on a piece of papyrus, wax paper, etched on a stone. It is the magic of taking words and putting them down and locking ideas in time. To be able to go back in the future and look back on what you learned in the past and be able to apply that. Okay, enough philosophizing. Let's jump into these charts. The only thing that's down on our charts for the day is the S&P 500 down just a little bit, 0.22%. What do we see going on as far as candle movement goes? We have a little green up candle with a wick on top forming for the week after the weekly vertical crossover last week. We see the derivative oscillator continuing to deteriorate. Price percent oscillator pulling away from the red signal line 2 days in to a 5-day candle. Let's go to the 2-day chart. What do we see there? Well, we see again the last 2-day candle. And we have Tuesday. The prior 2-day candle ended on Monday. So what does that mean? Well, you can easily deduce that this is the first day of the latest 2-day candle. And it is hitting about where things were before as far as that candle goes. Candle body is higher, but the wick itself might be a tad higher. We see the price percent oscillator heading, it's a little less than flat. Derivative oscillator still negative. Of course, price percent oscillator itself is negative. Look at the half-day chart. That's where we can see things up in the morning and then down in the afternoon. Not quite penetrating the half-day trend line. So we'll continue to pay attention to what's going on. We don't have a good 2-day trend line, as you can see there. Our weekly trend line, not much of anything there either. So again, the overall mood of the S&P is down, as seen by the 2-day and the weekly. Of course, what gives us some concern is that weekly, we see that the derivative oscillator is still positive. What do we like best? We like it when the weekly and the weekly's price percent oscillator and the derivative oscillator cross over in the same direction at the same time. Okay. Let's leave the S&P 500, go to the Nasdaq 100 on the weekly, up for the day, hardly 0.14%. So just barely. Price percent oscillator still tracking down a little bit. Derivative oscillator gaining downward momentum. We had that crossover going down back on the week ending the 7th of May. 2 good down weeks. And then this week, sort of sliding sideways as we get deeper into it. You'll see more as we look at the charts. But again, price percent oscillator still heading down. Look at the 2-day. That is where we see that sideways slide. And then over the last 3 days, that's the latest 2-day candle, and this current candle, we see things moving up, touching on that weekly trend line at this point. Price percent oscillator negative, but heading up, getting closer to the red signal line. Derivative oscillator losing downward momentum. So we'll see how things continue. This is just first day of the latest 2-day candle. We look at the half-day chart, and we can see again where things, when they bottomed out last, back on the 19th of May, on Wednesday morning, we saw things, a little bit of indecision in the afternoon, then moving up, hiccuping, slowing down on Friday afternoon, and then popping up Monday morning, afternoon, Tuesday morning, and then slowing down Tuesday afternoon, sitting right there on the half-day trend line. So we'll wait and see sort of what that does. Price percent oscillator lost a little bit at the end of the day. Derivative oscillator lost a little bit at the end of the day. Price percent oscillator still heading up. So we'll keep our eye on the prize with the Qs. Still overall push, still down on the Qs also. So that's where we are as far as stocks go. Let's go to bonds. Bonds up for the day, 0.93%. Now, bonds crossed over going up back on the week ending the 30th of April, and then, of course, slowed down and dropped over for 2 weeks. Now they're trying to move up some. That price percent oscillator spiking up, pulling away nicely from the red signal line. Derivative oscillator gaining a little bit of momentum. 2 days into a 5-day candle. Latest 2-day candle looking nice after a prior 2-day up move. Again, not bad the way things are moving. Derivative oscillator's gone positive. Half-day chart, of course, we can see a nice set of 1, 2, 3, 4 days of really nice up movement in 20-year bonds. So again, perhaps that's catching on. Would love to see this penetration of that old weekly trend line. Again, after that drop off, but we'll just wait and sort of see how things continue to move along. That's where we are on bonds. Let's go to gold. What do we see going on with gold? Well, we had been waiting for gold, as we've spoke about for months. As I've mentioned several times, since gold transitioned over, going up back on the week ending the 23rd of April. And of course, that next week gave us a little doubt. Didn't you feel a little doubt? Worried about, hey, is that going to work? Well, of course, look at it. Gold up for the day, 0.91%. Nice green up candle forming, pulling away the price percent oscillator from the red signal line. Derivative oscillator spiking up. 2-day chart looking just sweet as we see, what is that, 7 days of nice up movement right up that trend line. Price percent oscillator heading up. Derivative oscillator. Half day. Half day had gotten a little sideways sliding and then has taken off here lately. At the end of the day, crossing over, going up. Quite sweet. See if we can redraw that trend line a little bit. Yeah, there we go. So gold is looking sweet. Just glad to see gold taking off. Now lastly, we go back to our weekly chart. Head to Bitcoin. Bitcoin up a little bit for the day, and a little bit for Bitcoin being up 1.10% ain't much. Still lots of downward pressure on Bitcoin. Derivative oscillator, price percent oscillator spiking over, going down. Red down candle for the week. Latest 2-day candle still showing red. And we see the price percent oscillator, derivative oscillator heading down. Half day, again, we saw where Bitcoin bottomed most recently back on Wednesday the 19th. And again, it sort of popped up a little bit, never went above where that last big down movement was, just sort of tracking sideways. Bitcoin still lots of downward energy there. That is where we are, folks, as we end the day. Feeling better each and every day, getting stronger. Thanks so much again for all your best wishes after that bout with pneumonia last week. Appreciate all the book orders. Appreciate the Patreon support. We love to hear from you. God bless, my friends. All the best from the whole team at Charting Wealth World headquarters.